By the end of this video, you will have a complete understanding on the top 5 criteria for spotting penny stocks that are about to spike. Now, they do not need to have all 5. But the more that they have, the more likely they are to spike. And the reason that this video is focused on penny stocks is because this is the niche where we see 50 to 200% massive run-ups. But I want to be completely clear, penny stocks are any stock that is under $5, as defined by the SEC. And here at ZipTrader, we generally focus on stocks that are on the higher end of the spectrum, because as you get closer to sub $1, all of a sudden you get into this area where a lot of them are unregulated, a lot of them are just too sporadic to trade off of. We usually don't go under 50 cents, but a lot of the time we stay above $1 just because that's where it's a little bit more predictable, because that's where you get the benefits of penny stocks without a lot of the drawbacks of trading penny stocks. But anyways, folks, before we get more into it, the only thing that I ask in return for this video is that you, yes you, hit that ravishing like button. That puts good juju out into the universe, and that helps us with the YouTube algorithm. And of course, never forget to subscribe for more short, sweet, and simplified videos on how to trade the stock market. Okay, so to start, the first line of criteria is abnormal volume. Now, for the newbies in the room, volume is simply the number of shares being traded at any given period, and it's indicated here on the chart. This is important, for example, because if we were looking at a recent runner, we could see dismal volume and then boom, huge abnormal volume. And understanding how to utilize volume is key to understanding when a penny stock is about to spike. Of course, I should mention that there is a huge stigma around low volume penny stocks. Every single time that I make a top penny stocks video, someone will comment and message me saying that I'm stupid and I should never recommend low volume penny stocks. But to allow me to be crystal clear, I would never recommend buying a stock if it does not have enough volume, because then you won't have the liquidity required to enter and exit a position. It's as simple as that. But the thing is that with many of these penny stocks, like BME, we'll have periods where the volume is too low, there's not enough liquidity. But then all of a sudden, when the catalyst happens, the volume increases rapidly, and that gives us the opportunity to trade off the price action. And that's why you can't just discount stocks because they have low volume. If anything, you should be watching stocks that have low volume for outbreaks of volume. But with that being said, when a stock has a massive influx of shares being traded, that means that we are going to have more fluctuation. We love fluctuation. And in the case of BME, that was a huge factor helping to contribute to the run-up. But moreover, you need to understand that when we have an upward sentiment stock, if we add more investors into the mix, that means that we are essentially adding more fuel to the sentiment. This relationship is very similar to the relationship between fuel and fire. If you have a fire that is burning and you add fuel to it, it is going to burn more. And acknowledging this means that you can check for stocks that have abnormal volume and find them before they run up massively. For example, with XNet, we had low volume and then boom, started seeing some early warning signs of heightened volume. Now it's at this point where if we can identify sentiment, we can then make a play based off the volume. But how do we identify sentiment? Well, we can use our other elevating and deprecating factors. For example, we have price strength here, identified by the confirmation and trading above the blue SMA line, which is our price strength SMA line, and we are in an upward direction over our red directional SMA line. So we have 2 indications of elevating factors. Thus, we can deduce and we can further grasp the entire picture of this by actually going in deeper and identifying a catalyst, which can then lead us to a conclusion of whether or not we have upward or downward sentiment in a stock. For example, if a stock such as this one had a positive news announcement, we can't say for certain whether or not the reaction is going to be positive or negative, because the market is very emotional in the short term. It could react to a piece of good news in a bad way. You really never know. So the only thing you can do is create a guesstimate. Guesstimates are good because we could add that to the list of elevating factors. You may be guessing on a few different factors, but if you're adding a ton of positive factors to your list of elevating factors, all of a sudden you've stacked a lot of probabilities. So it takes a lot of the guess out of guesstimate. And abnormal volume in an upward sentiment stock is a huge elevating factor. But how do you actually go ahead and find stocks that have abnormal volume? Well, one way is to simply go to finviz.com and go to the unusual volume section. Pretty simple stuff. If you push on it, it'll take you to a ton of different ones that it's spotting intraday. Okay, the second criteria is institutional investors. I love penny stocks with big name institutional investors. When it comes to opportunities in sketchy markets, big name brands can act as a figurative rock holding them down. But when a big name brand enters the mix, that also serves as a catalyst for potential moves. For example, GoPro ran up 12% the day of announcing a partnership with Prentice Capital, which is a big name in the niche. And likewise, if you can identify opportunities with a large amount of institutional investors holding on, you are less likely to be investing in smoke and mirrors. Big name brands such as BlackRock or Vanguard have teams and teams of analysts scavenging through each and every opportunity. While I always say that analysts are monkeys, when it comes to firms that are actually putting their money where their mouth is, they're less likely to be monkeys. But understanding institutional investment decisions also gives you a heads up when a big name brand finds an opportunity that we may have missed. And as retail traders, we just don't have the brain power or the resources to find each and every opportunity as they present themselves. For example, in my personal research, I found that TTNP, which is essentially gutted both fundamentally and in terms of their share price, I found that they are still receiving large increases quarter over quarter of investment from large institutions. Thus, I've added that to my watch list, and I'm looking for other elevating factors that might predate a run-up, such as the other ones we've talked about. Okay. Next criteria. So if you're looking for a penny stock that is about to spike, doesn't it make sense for that penny stock to have a previous pattern of doing so? That's something that I like to call spikeability. If you can identify a stock with previous spikeability, you can then identify what made it spike in the first place and then aim to target similar events in the future. For example, Eton was our previous pick and it spiked massively. But when I originally introduced Eton, I had identified previous patterns of spiking massively and then attributed those to the fact that they had FDA-related announcements on those dates. Thus, next time we had a similar announcement, which was publicly announced, we could then say, okay, well, it makes sense that it's going to spike again on that particular date. And that is why I always look for spikeability when I present biotech catalysts. And I have tons and tons of examples of this. If you just watch our top penny stocks videos, you could see all the different opportunities that we've presented that have had massive fluctuation and spiking to trade off of. But I'll show you one more NBRV. So the moral of the story here is that if you want to figure out how something is going to behave in the future, you need to look and see how it behaved in the past. Okay, next. Now, building off the last criteria, one of my favorite ways of identifying penny stocks is a little bit more on the fundamental side. Again, since trading is largely based on the fact that patterns tend to repeat themselves, one of the best ways we have to gauge future performance is by gauging previous performance. And this is usually thought of in just the terms of price action, but it also applies to management within a given company. For example, when I originally pointed out ADMA on my top penny stocks video, before these spikes, one of the reasons I did was because its board member had a previous history of leading companies to massive spikes. This spike in ADMA happened in April, but the company was led by Mr. Elms, who had just 2 months prior led Zizan to a similar massive run-up. So if you can connect the dots and say, okay, well, hey, Mr. Elms has a history of running companies into massive fluctuations and most notably into massive spikes on FDA announcements. Under his leadership, we have a pattern of that happening. So pairing previous history can be a powerful way to find future results, and digging into board members, especially new ones that join the teams, that can help dictate when a new penny stock is about to spike. Okay, and the last one is identifying and evaluating a potential catalyst. And this is one of the most famous ones on this channel. So the ones that I like to focus on personally, and you could choose whatever you want to focus on, but what I like to do personally is focus on stocks that have a biotech related catalyst. The reason is because stocks in the sector generally give you an exact date at which their FDA decisions are going to be coming out, aka when their drug is approved to enter the market, and they give you other dates in terms of phase trials and presentations and a bunch of other insider activity that can lead you to a conclusion as to whether or not it's ultimately going to get approved, which can then act as a catalyst. And each of these individual events also act as catalysts in and of themselves. And I have a ton of free trading tutorials for folks who want to learn how to grow their account in this way. But the reason that we present these strategies is because they have clear dates at which price action change and events are going to occur. For example, using a free resource such as biopharmacatalyst.com means that we can look and identify which stocks are going to have huge announcements, and then when we start seeing other criteria on this list, such as height and volume, we can then plan our entry point. PFNX was a recent example of this, so was MLNT. But there are tons of other examples, and the key with this is identifying the date, tracking the catalyst, and then figuring out how relevant the catalyst is to the company. For example, if a company only has one drug in their pipeline, their entire financial future will likely rely on that one drug, and thus an FDA approval is going to be a much bigger deal for them. Anyways, folks, I hope that this list of criteria was helpful for you. Penny stocks are quite a challenge. I always recommend folks start using a paper trading platform until they can prove to themselves that they know how to trade them. If you would like to learn more about how to grow your account step by step, by step. We now have ZipTrader U, which is our complete roadmap starting from the ground up. We are about halfway through our enrollment, but if you use coupon code FIRST400, you will receive a discount. If this is something that you'd see as valuable, I'd love to work closer with you. The link to that will be in the description below. Anyways, make sure to hit that ravishing like button. Make sure to subscribe if you haven't already. And of course, I'll see you in the next video.